Hello, this is Justin from Auto Trading Academy. So in this video we're going to look at how big is the actual retail forex market when compared to the overall humongous trillions of dollars per day market that we often hear about in the news. So what do we mean by the retail forex market? Well, essentially it's basically us solo, independent traders trading at home through the internet via brokers, ECN brokers, STP brokers, and dealing desks. So essentially you have to understand historically, you do basically need a little historical perspective to sort of answer this question, to really understand what's going on, because the retail forex market was born basically because of technology. It wouldn't exist now if there was no internet and technological advancement. That's basically, there's lots of different factors there, but essentially without the internet and without the technology, it just wouldn't be here. So essentially it's online trading, and it's basically us independent guys, hacking away at the market. So if we do look at the historical perspective very quickly, essentially the forex market at the moment overall is around 5.3, 4. It's always sort of changing, trillions of dollars per day. But the major part of it is the interbank market. That's basically where the big guys play, the banks, the financial institutions, and they basically trade with each other quite big sums, and there's no sort of central exchange, which is basically the over-the-counter market. There is no big exchange where every single sort of trade is going to and then is exchanged and so on. So it's a basically huge bilateral market. What I mean by bilateral is basically one bank, let's say, trading with another bank, because just as it's very, very flexible. So essentially that's what it is, over-the-counter market with no central exchange, where everyone is basically trading with each other and so on. Now, in terms of a historical sort of perspective, basically the interbank market was basically all there was up until around 2004, 2005, where the internet basically and the technology advancement sort of gave birth to online trading. Now, before that, only really high net worth individuals could sort of trade, and they still had to trade in big sums, and they certainly didn't have the leverage that we have today in online trading. So if you had a couple of million in the bank, you could basically trade that way through a bank or through a broker, and essentially you could participate in the big market that way. But before that, but basically after around 2004, 2005, MT4 was born, and internet came along, and sort of a good mix of technology there and innovation, and retail online trading was born. And the thing that you have to understand, it was born in terms of a dealing desk perspective. So basically MT4 was designed to be a dealing desk, basically a market maker, or a casino in a way. So we'll talk about this later on, but essentially MT4 was born, retail online trading began, and all of online trading through MT4 was dealing desk type. So essentially 16 years ago this was impossible to even trade and online, and basically trade online. And now look where we are. So things are progressed very, very fast. Huge sort of change in terms of infrastructure and so on. And if you think about it, anyone now with $100 spare can quickly deposit money in some account and begin trading within a couple of days after they submit all the required documentation. But essentially, if we sort of to look at how big is this market now, it's pretty tiny. So retail online banking is only around 6, 7, 8% of the overall market. So it's around $300 billion per day. But if you look at how fast it's been growing since around 2004, it's 15, 20, the numbers are big. It's per year. So there's huge growth per year. And if the trends continue and online trading continues to grow, the real important sort of point here is that in 20 years time, we could be looking at 50% of the entire, trillions of dollars per day, which however the big the number is going to be, is probably going to be about 8 or 9 or maybe 10. So 50% of that could be basically accounted for all of us, solo independent trader guys for basically trading through the internet. So the perspective and the change is big, and you need to understand that basically online trading began with dealing desks. Then as technology advanced further, because the technology didn't exist for ECN or STP market pass through, it just didn't exist. And then as the technology developed, ECN brokers came about, STP brokers, and this other sort of broker mix developed. So the broker mix is sort of beyond the scope of this video. We'll look at that in another one. But essentially, a dealing desk is always trading against you. So every trade you place, they place an opposite trade, and basically when you win, they lose. When you lose, they win. And then ECN and STP, they basically pass you through straight to the market. And the reason why that's quite important to understand is basically is because 50% of all these $300 billion a day, which is quite a rough estimate, is actually dealing desk activity. So basically they don't actually ever reach the market, because the broker, well, it's not even a broker, because it's just basically a casino. A broker is actually ECN or STP. Dealing desk is not even a broker. It's basically just trading against you, and your trades actually never reach the market. So if you think about it, out of this 300, which is a rough estimate, only half of them actually reach an impact of the market, and that's basically ECN and STP accounts. And here I have a nice chart where basically you can have a look. There's lots of sources on the internet where you can have a look at volumes and so on. So this is August 2016. They look at actually a 45-day period from July to 15th of August, and they look at average volumes in billions. And you can see the one at the top is Saxo Bank, which was hit pretty hard with the Swiss franc event in January 2015, as well as FXCM, which almost went bust and had to be rescued with $300 million loan. So actually the two almost biggest brokers there suffered very, very badly during these events. So again, those are the sort of why it happened and so on is beyond the scope of this video. We'll look at those in another one. But essentially, if you look at the biggest broker here, is 13 billion, 12, 11, and if sort of were to add all of these up globally, it will come to around 300, maybe less, maybe more, and so on. But the interesting point is that only half of it is only reaching sort of the market because of the old dealing desk model, where basically brokers are just trading against you, which is almost exactly the same as a casino, poker or any other sort of type of gambling. So essentially, that's how it is. The market, how big is the retail forex market? It's around 300 billion, and it's growing very, very fast. And basically in the future, looking at 10 years, 20 years in the future, we're going to be a pretty big part of the market. And I think we're going to be, a big mover in that sense. And we're probably going to be the smarter guys, the smart money. Well, I hope at least. And yeah, so that's the more interesting point. And then obviously another interesting point is that the ECN and STP actually do basically market trades that actually do reach the market are only about half of that volume. So that's pretty much it for this video, and we'll look at some other interesting factors in another one.